Hi, this is Kumar for Trade to Success University. Welcome back. So before starting Module 5, let's review the Module 4 exercise. So we've got Module 4 Chart 1. So the rules for this trade is that the stop needs to be placed at the previous pivot high. The break-even is when the risk-reward in the trade is 1-to-1, and the target is at a 10-to-1 risk-reward. So where are you going to be placing the stop? So the stop needs to be placed at the previous pivot high. So looking at the chart, we can see that the previous pivot high was this pivot high right here. As you can see, to the right we have a lower high, and to the left we have a lower high. This pivot high is the most recent previous pivot high from the entry. And so that is where the stop is going to be placed. What about moving your stop to break even? Where will you move your stop to break even? Well, our rule is that the break even is when the risk reward in the trade is 1-to-1. So what that means is when the profit in the trade equals the same amount of pips that we risked in the trade, that is when we will move our stop to break even. So visually what we see is we want that same distance between the stop and the entry to be in profit, and that is where our break even will be. So that is approximately as indicated. That is where we're going to be moving our stop to break even. So when price reaches this point right here, we're going to move our stop from here down to the entry price. Now where would you exit the trade? Now the exit is obviously the target. The target is at a 10-to-1 risk reward. So what that means is the risk is from the entry to the original stop. 10 times that in profit is where we will be exiting the trade. So what you would have done is you would have looked at the entry, you would have looked at the original stop, and approximated that 10 times going down into profit. Now a good way to help you with that is by looking at the actual grid lines and counting that many grid lines down. So our risk here is around about 1 square from one grid line to the next grid line. It is obviously less than one grid line, as you can see here. So you're looking at around about 90% of a box. So what you would do is you would count that times 10 down, and that is where you would exit your trade. So where did you actually say you would exit? That's the answer right there. You would exit around about this point right here. Now you don't need to be exactly there. You don't have the exact figures, so you can't work it out. You've just got the grid lines here. So approximately, if you were anywhere around here, that's fine. So at this point here, you're going to exit the trade. You will buy back. We sold first, and we're going to be buying back at this point. What is your risk reward in this trade? Now this is kind of a trick question. Your target is at a 10-to-1 risk reward. So you automatically know that the risk reward in this trade is 10-to-1. Okay, so let's look at Module 4 Chart 2. So the rules for this trade is that the stop is placed at the previous pivot high. The break even is when the risk reward in the trade is 1-to-1. And the target is determined by trailing by pivot highs immediately after entry. So where are you going to be placing your stop? So the stop, as per the rules, is going to be placed at the previous pivot high. So this is the entry bar right here. So we go back in time, looking at the bars, seeing which one is a pivot high. And the first pivot high is where you're going to be placing your stop. So looking at this, we see that the first previous pivot high is this high right here, because on the left we have a lower high, and on the right we have a lower high. So this pivot high is where we would be placing the stop. What about our break even? Well, the break even is at a 1-to-1 risk reward. So what we're going to do is we're going to see that the entry and the stop is our risk, and that many pips in profit is where we would be moving our stop to break even. So all we're going to do is look at that distance here between the entry and the stop and project that into profit to work out where our break even point is. And that is as indicated. So the distance between the entry and the stop is the same between the distance and the entry and the break-even point, because it's a 1-to-1 risk reward. So when price reaches this area here, we would move our stop from the original place down to the entry price. What about exiting the trade? Well, our exit is our target, and the target is determined by trailing by pivot highs immediately after entry. So what that means is straight away after entry, every single pivot high that is formed, that's where our stop is going. And if we get stopped out, we get stopped out. That is where we're going to exit. So let's look at each individual bar and let's see if a pivot high has occurred. So this green bar right here, has a pivot high occurred? No. What about when this green bar completes? No. What about when this red bar completes? Yes, we have a pivot high here. This green is now a pivot high, because on the right we have a lower high and on the left we have a lower high. So our stop moves down from our entry down to the top of this green pivot high here. Then we carry on going. Has a pivot high occurred here? No. Has a pivot high occurred here? No. With this green bar? No. With this red bar? No. With this green bar? No. 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 With this green bar as well? With this green bar? No. With this red bar? Yes. Now this green bar here is a pivot high, because on the right we have a lower high and on the left we have a lower high. So our stop moves from this high here down to this pivot high. Now we carry on with this green bar. Is it a pivot high? No, we don't have a pivot high. What about with this green bar? Now this green bar doesn't create a pivot high, but we get stopped out because our stop was above this pivot high here. So our exit is as shown. When the price goes through our stop above this pivot high, that is where we would buy back at a profit. Now what about our risk reward? Well, we're going to approximate the risk reward. We're going to look at the grid lines and we're going to see how many of those are in the risk and how many of those are in our reward. So between the entry and the stop, we have around about 1 and I would say approximately 1.5. So 1.5 grid lines is our risk. And if we look at how much it is between our entry and our exit, we have 1, 2, 3, 4, around about 4.5. So 1.5 risk and 4.5 reward. That gives us a risk reward of 4.5 divided by 1.5, which is a risk reward of 3-to-1. Okay, let's look at Module 4, Chart 3. So the rules for this trade is the stop is to be placed at the low of the bar before the entry bar. The break-even is after 50 pips. And the target is determined by trailing pivot lows after the break-even point. So where are you going to be placing your stop? So this is an easy one. The rules designate the exact place, and that is the low of the bar before the entry bar. So the entry bar is which bar? It is this bar right here. So the bar before the entry bar is this bar right here. And the low of the bar before the entry bar is this low, obviously right here. So the stop will be placed as shown under the low of the bar before the entry bar, which is the low of this green bar right here. What about your break even? Where will you move your stop to break even? Well, the break even is after 50 pips. So what we got to do here is we got to look at the price on the right. So the entry is, if we just carry on this line here, it's this amount right here. It's 1.5994. 1 pip is the 4th decimal place, so we don't need to look at the 5th decimal place. So 1.5994. What is 50 pips more? 50 pips more is 1.6044. So in between these two prices right here. So the break-even price will be this price right here, 1.6044. So obviously it will be approximated because you don't know exactly where it is on the grid line, but it's around about this price right here. So when price reaches this price here, you'll move your stop from here up to your entry price. What about your target? Where are you going to exit? Well, the target is determined by trailing pivot lows after the break-even point. So after the break-even point, which is this price right here, we are going to start looking at every single pivot low, and we're going to be moving our stop up and up and up until we get stopped out. So we're going to look at every single bar after the break-even point and see whether it's a pivot low or not. So once this red bar completes, has a pivot low been established? No. What about when this green bar completes? No. When this red bar completes? No. When this red bar completes? No. When this green bar completes? Yes, we have a pivot low here. This red low is a pivot low because on the right we've got a higher low and on the left we've got a higher low. So our stop moves from the entry point up to this pivot low here. Then we carry on. As we go through, we see that this red bar here has pretty much the same low as the green, so it's not a pivot low. But when this red bar completes, we see this green bar is a pivot low. So we move our stop from here up to the green low. Then as we carry on, we have pretty much the same lows here. We see after this green bar completes, this red low is a pivot low, so our stop moves up underneath this low. Then as we go on, we see that this green low is a pivot low, we move our stop higher. Then as we carry on, this green low after this red bar completes is a pivot low, we move our stop higher. Then as we carry on, we see after this red bar, this green low is a pivot low, so we move our stop higher under this green low. Then as we carry on, we see that after this red bar, this green low is a pivot low, so we move our stop higher. Then after this green bar completes, we see this low is a pivot low, so we move our stop higher. And then we see price comes down and stops us out at this price right here. So that is where we would exit our trade and sell at a profit. What is your risk reward here? So again, we approximate by looking at the grid lines. We see that the original risk is about 1 and I would say a quarter grid lines, 1 and a quarter boxes. And what is our reward? Well, our reward from the entry point is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 boxes. So approximating that, we've got approximately 1 and a quarter for the stop and about 11 for the reward. So we're looking at approximately, of course we cannot be exact because we're just looking at the chart, but we're looking at around about 8.75, 8.8 to 1 for the risk reward. Now let's move on to the next chart, module 4, chart 4. So here is the chart. So the rules for this trade is that the stop is placed at the previous pivot high. The break even is after 5 price bars have completed, that's including the entry bar, and the target is determined by trailing with pivot highs after the break even point. So where would you be placing your stop? Well, again, the stop is at the previous pivot high. So we go back in price bars and we see where is the previous pivot high. So we can see first that the entry bar is this red bar right here. That's when price first goes through the entry price. So we go back in price bars and try and identify a pivot high. The first pivot high that forms previous to the entry bar and higher than the entry bar is this pivot high right here, this green pivot high right here, because on the right we have a lower high and on the left we have a lower high. So that is where we would place our stop, above this green pivot high. The break even is after 5 price bars have completed, including the entry bar. So we have the entry bar, that's number 1. because we're including the entry bar, the second bar, the third bar, the fourth bar, and the fifth bar. So after the fifth bar has completed, we would move our stop from the original place down to the entry price. So from the original down to the entry. So once this bar here, the fifth bar is completed, we would move our stop down to the entry price. Now the target. Where would you exit your trade? The target is determined by trailing with pivot highs after the break-even point. So this is the break-even point. So we look to the right, carry on until we see a pivot high form. The first pivot high that forms after this red bar completes is this pivot high here, this red high. So we would move our stop from the break-even price, which is the entry price, down to this high. Then as we go along, we see the next pivot high is this red here. We move our stop lower to this high here. Then as we go along, we see the next pivot high is this pivot high right here. So our stop moves lower from this pivot high down to this pivot high. Then the next pivot high is this one here. So our stop moves down to this pivot high. Then the next pivot high is this green high right here, because we have a lower high to the left and a lower high to the right. So our stop moves to this high here, and as we see on the right, price goes up through our stop, and so we get stopped out right here above this pivot high when price goes above this pivot high right here. And that's where we would exit our trade for a profit. What is our risk reward? So again, let's look at the grid lines. We've got around about 1.5 in risk, or just over 1.5 in risk. And in our reward, we've got 1, 2, 3, 4, 5, 6, 7, 8.5. So that gives us a risk reward of around about just over 5 to 1. Okay, let's move on to the next chart, Module 4, Chart 5. So here the rules for the trade is that the stop is placed at 60 pips away. The break even is when we're in 50 pips profit. And the target is at a 3 to 1 risk reward. So where will you place your stop? Well, our entry price is at the 1.0927. Remember, we're looking at 4 decimal places because that's 1 pip. So 1.0927. So 60 pips higher than that is 1.0987. So that is this price right here, 1.0987. Remember, we're looking at the 4th decimal place. And that is this grid line here. So our stop will be right here. What about our break even? Our break even is when we're in 50 pips profit. So again, we're looking at entry at 1.0927 minus 50 pips from that. Remember, we're in a short trade. We want price to go down. So when we minus 50 from 1.0927, with 1 pip being the 4th decimal place, we have 1.0877. So around about this area here. So when price reaches this price right here, which is in between the area I just indicated, we will move our stop from the original place down to the entry price. What about our exit? Well, our target is at a 3 to 1 risk reward. So if we look at the grid lines, we've got a 1, 2, 3, 4 grid lines in our risk. So 3 times that, which is our 3 to 1 risk reward, which is 12 grid lines, that's where we want to exit. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So at this price right here, that's where we want to exit our trade. So is that where we exit our trade? Did you answer yes or no? The answer is no. Why? Because we moved our stop down to break even, which is our entry price when price reached this price right here. What we see is price actually went up and went through our stop level, which is our entry price. So our exit is actually this price right here, which is our entry price. We sold and bought at the same price. So our exit is our entry price. What is our risk reward here? Well, our risk reward is 0 because we didn't gain anything, we didn't lose anything. I hope you got that right. Okay, so those were the answers to the Module 4 exercise. I hope you got all of them right. And if you didn't, then I hope the explanation of the answers cleared up any confusion. So now let's get started with a new material in the next module. And so if you continue over to the next page, I'll see you in the next video, where we'll start Module 5.